With the economics editor of the Australian newspaper, my good friend and colleague Adam Creighton. Good to speak to you, Adam. How do you fix this economy? Everyone wants growth.
Yeah.
You've got Labor, in my view, foolishly talking about another version of cash splashes and stimulus. What about tax cuts? Is there room to move on tax cuts?
Yeah, look, frankly, the last thing we need is some other version of 2009 cheques sent to households. That would be a disaster. Of course, that is what Labor would like to see. But the obvious answer for the coalition, for the government, should be simply to bring forward those ludicrously dated, in my view, tax cuts, which don't really start until 2024. I mean, is there a government on earth that schedules a tax reform in 6 years' time? I don't think so. So the legislation's there. The parameters of those tax cuts have been set. They just need to change the date to the 1st of January 2020. And of course, that will be a huge stimulus. And I might add, it would be far less likely that the Reserve Bank would cut interest rates a fourth time if it knew that there would be a lot of fiscal stimulus via tax cuts coming in the new year. And the good thing about bringing forward those tax cuts, at least according to the Centre for Independent Studies this week, is that the government would still have surpluses for each of the next 4 years.
Well, that's the extraordinary thing. If you could do that and still deliver surpluses, presumably the surpluses would be smaller,
yes,
but you'd still be in the black.
Exactly.
And at the moment, given how hard it was to legislate the tax cuts, it looks like you'd actually get Labor Party support.
Yeah, look, that's quite remarkable. Labor does seem to be actually saying to bring forward at least some of the tax cuts. So perhaps that is a partial solution for the government, that they can bring forward maybe the 2022 round of tax cuts, which at least would be something. The interesting thing from the CIS paper this week, it basically said that the first round of tax cuts, which started in July, have actually damaged the economy, because for people earning between $90,000 and $125,000, which of course is a substantial sum of people, their marginal income tax rate has actually gone up. So that reduces their incentive to work and save. The reason that that's gone up is because that $1,080 needs to be clawed back for people earning more than $90,000 a year. And look, for some people in the economy, that would actually make a difference, that marginal tax rate increase. And that's why the CIS concluded that this first round have actually damaged the economy. So perhaps it's no surprise that, we've seen sluggish retail sales growth in July, also August. So far, a little sign that the first round of tax cuts has actually helped the economy.
Why is it, do you think, that we haven't seen that kick along, especially perhaps on the retail side, that we would have expected by now, given those tax rebates of around about $1,000 that went to most families in this country, early, I suppose in the second half of this year?
Yeah, look, it is somewhat of a puzzle. I mean, two explanations could be that these households who have gotten the cheques, they are heavily indebted. Remember, we're the second most heavily indebted group of households in the world after Switzerland. So some of the money may simply have been used to put in the offset account and to pay off the debt faster. But also it's worth pointing out that these offsets weren't necessarily cheques to households, if you like. I mean, if households already owed the tax office a bit more tax, then they wouldn't have actually got a cheque. I mean, I've spoken to a number of people actually who've said that they've told their children, in fact, that, oh, look, you're going to get $1,000, but in fact they haven't got $1,000, and in some cases have actually owed the ATO money, and it's worth pointing out that in the past year or so, the ATO has really been cracking down on personal tax deductions. And there's a good argument to say that the crackdown far exceeds the $8 billion in tax cuts. Indeed, over 2018, personal tax collections rose almost 10%, which is pretty extraordinary given population growth is about 1.5%, inflation's about 2%, and yet the tax haul is up 10%.
That's amazing, yeah. So those rebates might have been swallowed up by compliance. It's, Adam, tell me, wrap your economic brain around this, because as a mug consumer, it seems obvious to me that sort of 0.25% cuts in interest rates when they're already at 1%. Where's the surprise that wouldn't boost the economy? I mean, how does that boost the confidence or cash reserves of mortgage holders? But I just don't understand why the Reserve Bank would even bother. Are they really focused on trying to keep the dollar low?
Well, look, it certainly has dragged confidence down. I think confidence in the most recent reading is at the lowest point in 5 years, and that immediately followed those 3 rate cuts. So that should be a concern for the RBA. Look, the RBA has one theory, indeed not just the RBA, all the central banks of the world are basically operating on the premise that their short-term interest rates do affect the rate of inflation. I mean, of course, I think we've seen that they don't, and they just lead to greater household debt. But nevertheless, that's the only theory that central banks have, and so they're almost compelled to act as long as they have this inflation targeting regime, which they have, and that says that the RBA's got to get inflation back above 2%. It's currently 1.6%. It's fallen short for 5 years. The only tool they have is to cut the cash rate. That's why they're doing it. Look, I think in their heart of hearts they don't think it works either, but they feel as though they have to do something.
Perhaps better to do nothing than the old doctors,
exactly.
the Hippocratic Oath.
Exactly.
Do nothing. First, do no harm.
Exactly. That's what I say.
Yeah, you used to work at the RBA, of course.
I did for a few years. Yeah.
I just want to put you the idea that might sound wacky, but no smaller brain than the great Ross Greenwood has put it out there that perhaps they ought to be marginally increasing interest rates to actually stimulate the economy and encourage confidence.
Well, to go to your earlier point, the Reserve Bank would be very worried about the exchange rate. I mean, to answer that question, yes, they are worried about the value of the Australian dollar. In their Keynesian models, they think a weak exchange rate is a good thing because it spurs manufacturing. You know, we can argue empirically about whether that's actually true, but they don't want the currency to shoot up because central banks around the world are all cutting their cash rates or engaging in quantitative easing. And some economists say that this is basically a currency war, that all central banks are trying to weaken their currencies at the same time. And of course, if they all try to do that at the same time, the exchange rates basically stay where they were, which is what we're seeing, but you just end up with a lot more debt.
It's a conundrum. Thanks so much for joining us, Adam.